In today's video, I'm going to teach you about volume. Volume is one of the most important things in technical analysis, and if you're new to technical analysis, then you're in the right spot. Volume is absolutely one of the very first things you need to learn, and I'm here to teach it to you today. Before we dive right into what volume is and how to look at examples of it on a chart, just two quick reminders. One, this is part 4 of the Technical Analysis 101 tutorial series. If you haven't watched parts 1 through 3 yet, I'd highly recommend you do so. And lastly, if you enjoy this content, please click the like and subscribe buttons down below. This helps me out and supports the channel a ton. So let's first start off with just the definition here. What is volume? Volume is the amount of the underlying that you're trading. So while I'm looking at Apple here, it's the amount of Apple shares that are traded based on whichever time frame you have chosen. Regardless of whichever platform you're charting on, you'll definitely be able to add volume to it, and I would highly recommend you do so. On TradingView here, all you do is go up into indicators here, and then you can just search for volume and add it to your chart by clicking on it here. I already have volume on my chart, as you can see in this top left corner, and also at the bottom where volume actually shows up. Now, if you've never looked at this before, you might be a bit confused at what you're even looking at with all this information on the bottom. I'm just going to break it down quickly for you. Each point in time on the chart, or each candlestick that we're looking at, has its own volume, and each of those points are charted down below here in almost a bar graph style. So the higher it comes off from the bottom here, the more volume that we have. The second thing you'll notice is that it's just green and red mixed in between. So let's talk about what that actually means. If we just zoom into here and look at the actual candlesticks, you'll see that whenever we have a red candlestick, if we just hover over it, for example this one, and look where the mouse comes down to the bottom down here, the volume for that candle is red also. So in other words, volume just colors the same color as the candlestick. If you're not yet sure why candlesticks turn red and green, that was one of my past tutorial videos in this Technical Analysis 101 series, and I'd highly recommend you go watch that. The very last thing you'll see on the bottom here with volume is just this orange line that seems to randomly be going through it. So let's talk about what that is. This orange line is known as a moving average. In other words, it's just taking the average of volume over some period of time that you can set and putting that down below as well. So again, if we just zoom in here and we talk about where orange is right now, this orange line, you can see it's below this spike in volume here, but it's still somewhere above the bottom. If I go into the settings of volume here, you can see that I have it set as MA length 20. What this means is I'm using a 20 moving average length to actually calculate where this orange line should be. In other words, if we hover over this spot right here, we're taking the average volume of the 20 previous candles, all of these all through here, and that would plot where the orange line goes next. So in a one-line summary, this orange line is the average of the previous 20 candles volume. Now personally, I don't use this orange moving average line too much. However, it can give you some good context around how the volume currently is relative to the past 20 candles. If you see that we're significantly below the orange line, like right in here, we're likely consolidating or not really putting in a new part of a move. The volume is much lower than it has been previously, so we'll be careful in trying to identify reversals in the market when we have this super low volume. And on the other hand, when volume is significantly above the orange line, that's usually when we're going to see reversals in the market. If you see some sort of pattern that's indicating that a reversal might be happening, where maybe we were trending upwards and you think we're about to go downwards, but there's no volume associated with that pattern, it's very likely that the pattern's going to be a fake out, or at least just not have too significant of a move. On the other hand, if you see a volume spike, you can definitely validate that you're looking at the right thing with that pattern, and it gives you just one more piece of confidence that you're about to be correct. So let's go ahead and take a look at some examples of this. On this chart, you can see from about the beginning of January 2019 all the way through the end of April 2019, Apple was trending upwards pretty significantly. It was putting in higher lows and higher highs over and over again. If you were watching this, you might have been looking to see when the next reversal would actually happen. And when you saw this candlestick, this would have been a really good sign. It was a gap upwards, and this candle is a shooting star. Again, I go over shooting stars and different types of candlesticks in a different part of this Technical Analysis 101 tutorial series, so make sure you watch that one as well. So once we saw the shooting star get put in on the daily candles here, This is an extremely bearish sign, and we would have been looking for a trend reversal. Now, one of the key ways that we can validate this is by looking at the volume. If I just hover over this candle, you can see that this volume spike right here correlates to that candle. It's the highest volume candle we've seen since all the way back at the start of January 2019 when our uptrend started. You can see it beats out all these other peaks. And also, just looking at where this orange moving average line of volume is, you can see we've peaked significantly above that as well. So just by looking at volume and knowing that that's a shooting star candle, this reversal would have been very easily spotted in Apple. The second thing we can do with volume is look for divergences in the volume. What this means is that we keep putting in lower lows or higher highs, more peaks over and over, but the volume on each of those peaks is decreasing. So let's take a look at what I mean by this. We have 3 volume spikes all in the month of March 2020 on April. I'll go ahead and circle the 3 of them here. And then I'm going to put a square around where each of these volumes actually correlate to. So this candle right here is the first one, this candle in here is the second one, and this candle at the bottom is the third one. And you can see that each of these 3 peaks all had reversals off of them. So this one had a nice move from about $64 when this candle started, all the way back up to $76 before the downtrend continues. This one was down to about $61, $62, and then we rebounded up back to $70 on this next candle. And this one came all the way down to the $53 range, and then of course rebounded significantly up afterwards. But anyways, back to my point of divergences. You can see by looking at these 3 peaks of volume that they're all decreasing. The volume on this one is lower than the previous one here, and the volume on this one is lower than this one. The volume is downtrending in a sense. What this is showing is actual weakness in the market. As we keep putting in new lower lows, there's not as much force to continue downwards. And eventually, when the volume pressure is dying on the downtrend, that's when the bears are going to start to take over. And you can see that's exactly what happened here. Right after this third low, our third piece of divergence, the uptrend started to continue. Now, of course, volume can help you on the other side as well, and that's with identifying breakouts or fakeouts in the market. Again, back to the beginning of 2019 on Apple, we're trending upwards, and then in real time, you saw this red doji candle come in, followed by a red candle after it. This is a pretty good reversal sign as well. So again, we'd go ahead and we try to validate this reversal by looking at volume. Specifically, the volume on this red doji candle, which we would have looked at as our reversal candle. If we just hover over this and look down at the bottom here, you can see that this volume is pretty low. It's lower than that 20-day average volume, that orange line, and it's also one of the lowest volume candles we've seen recently. So while the candlestick patterns alone would have had you thinking that we were going to reverse right there, the volume is giving you quite a bit of a different signal and kind of telling you that maybe we won't reverse. There's not enough pressure downwards to actually go ahead and reverse. Now, of course, we did have 2 candles downwards, but after that, the uptrend continued very strongly. So that's a brief overview of volume and how you can use it in your trading. I'd highly recommend you add the volume indicator to your chart and pay attention to it when you're trying to make major moves in the market. If volume is low, be very careful with your trading and trying to predict a reversal. And on the other hand, if you see volume spiking and volume is extremely high, you might be getting a volume climax where a reversal is going to happen. As always, thank you all so much for watching and supporting this channel. If you did like this video, I'd really appreciate if you click the like button and hit subscribe below for future similar content. And of course, good luck trading.